There are ambitious plans to beef up Australia's agriculture sector, up to $100 billion by 2030, plans fostered and helped by the federal government. They'll be boosted by new agtech and foreign interest in food security and investment. It all means we're expecting major growth for agriculture, fishery and forestry, along with more regulatory activity. So how do we get there? Here's some food for thought for the next 12 months if you're an agricultural producer or agribusiness player. There'll be more global trading opportunities. We're a founding member of the world's largest free trade agreement, and we're negotiating with the UK, Japan and EU to unlock greater access to these huge markets. At home, the government is looking to increase funding for new projects and programs to boost biosecurity, biodiversity, innovation and infrastructure. Couple that on the tax side with extending the instant asset write-off, and you get an important shift for investors' commercial drivers. And those investors are seeing it. Low interest rates, rising commodity prices, and Australia's strong reputation for premium clean green produce are all enticing institutions and high net worth investors into agribusiness. We're also in the dawn of a new age of innovation, which will help lower costs and improve yields. That means more precise agriculture and livestock management, with innovations like indoor vertical farming, automation and robotics, livestock technology, better genetics, and precision agriculture, along with better and more accurate data flows. So that's what will help the sector. But there's always a flip side. Let's put to one side the significant and enduring natural challenges of drought, flood, fire, cyclone, and now pandemic. We might be selling more to a global market, but that comes with greater exposure too. And we're seeing that now with China's withdrawal from export markets, such as beef and wine. As Australian agribusiness embraces agtech, it also embraces a largely unmanaged cybersecurity risk. The government's countered that with new laws for critical infrastructure generally and foreign investment, so the sector will need to manage cybersecurity fast and stay on top of it. And the low cost of debt has meant there's a lot of it in the agribusiness sector. What happens when inflation leads to rising interest rates? There could be some restructuring, which isn't necessarily a bad thing, but it's still a concern for investors. And finally, increased activity generally is followed by increased regulation. The ACCC recently flexed its muscles, and there are changes to water regulation, foreign anti-bribery, modern slavery, and the list will go on. So with a busy year ahead, we'll need to get cracking.